This is India's #1 news network, and you're watching News 9. English news as it should be.
A very good morning. You're watching News 9. I'm Karthik Malhotra. And after the manic Monday, the Black Monday, the melt-off that we saw on the stock markets, there has been a sharp recovery in Asian markets. Now, the question really is, are Indian equity markets also going to open in the green as expected? We will bring you those updates as markets open at 9:15 a.m. But also on the show, and more importantly, after headlines of 14 lakh crore rupees of wipeout of investor wealth, how should you manage your money? Feroz Aziz and Mohit Gang will be joining us on the show to help you make sense of your money investments. You are watching Morning Brief at 9. This is Morning Brief at 9 right here on News 9. First up, let's look at the headlines making news this Tuesday morning. After Friday's rout that caused a global market meltdown, US stock markets closed mixed on Monday. Dow Jones almost 1%, while S&P down almost 0.2%. Tech-heavy NASDAQ, meanwhile, manages to end the session just about in the green. And wild swings in the US stock markets as rumors of Donald Trump pausing tariffs hits the Wall Street. Stocks rise sharply before falling again as White House clears the air, saying there is no tariff pause expected. And after China's retaliatory 34% tariff on US imports, Donald Trump's stern warning to Beijing to remove tariffs or face an additional 50% tariff over the existing 54% effective tariff on China. Goldman Sachs has upped its US recession risk probability to 45% from 35% earlier. Like we told you, Asian markets recovered today after Black Monday. Japan's Nikkei rises 6% in early trade. Hang Seng up 2.5%, while Kospi gains 1.5%. Taiwan continues to reel in red. External Affairs Minister S. Jaishankar speaks to US Secretary of State Marco Rubio on trade deal, agreeing on the importance of early conclusion of bilateral agreement. And after Donald Trump, now European Union also seeks zero tariff on car imports into India. Reuters reports that India is open to a phased reduction from 100% to just 10%, despite domestic auto players seeking at least 30% tariff on imported cars to stay. Apple is all set to buy more made-in-India iPhones after 54% tariffs on China, set to make Apple imports into US more expensive than those made in India and imported at a 26% tariff. This as per a Wall Street Journal report. And as oil prices fall below $60 per barrel, India raises excise duty by 2 rupees per litre on petrol and diesel. No hike in retail fuel prices though. Meanwhile, LPG prices have risen by 50 rupees a cylinder starting today. And before we get into the details of these stories, Prime Minister Narendra Modi is speaking live to beneficiaries of the PM Mudra Yojana. Remember, the scheme was launched by Prime Minister 10 years ago to facilitate loans to micro enterprises and grassroots entrepreneurs.
पेड़ बड़े होते हैं, सूर्य बहुत कम आता है, बारिश भी रहती है, तो उनको कैसा लग रहा है?
ये लगाने के बाद इन लोगों को बिल कितना 240, 250 का अंदर ही आता है। 3000 वाला को अभी 250 रुपीस का अंदर ही आता है बिल।
अभी आप हर महीने कितने का काम करते हैं? अमाउंट कितना होगा?
अमाउंट मेरे को
नहीं, इनकम टैक्स वाला नहीं आएगा, डरो मत डरो मत।
डायलॉग मिल रहा है।
हाँ, ये वित्त मंत्री मेरे बगल में बैठे, मैं उनको बताता हूँ।
अच्छा
वो आपके यहाँ इनकम टैक्स वाला दिया है।
डायलॉग से ऊपर मिलता है।
सपने वो नहीं जो हम सोते वक्त देखते हैं, सपने वो होते हैं जो हमें सोने नहीं देते हैं। मुसीबतें होंगी और मुश्किलें भी आएंगी, जो संघर्ष करेगा वही सफलता पाएगा। आई एम द फाउंडर ऑफ हाउस ऑफ पुचका। घर पे खाना वाना बनाते थे तो हाथों में टेस्ट अच्छा था, तो सबने सजेस्ट किया कि आप कैफे फील्ड में जाओ। फिर उसमें रिसर्च करके पता चला कि प्रॉफिट मार्जिन वगैरह भी अच्छा है, तो आप फूड कॉस्ट वगैरह मैनेज करेंगे तो आप एक सक्सेसफुल बिजनेस रन कर सकते हैं।
एक यूथ, एक जनरेशन है, कुछ पढ़ाई की तो उनको लगता है कि नहीं मैं तो कहीं नौकरी करके सेटल हो जाऊंगा, रिस्क नहीं लूंगा। आप में रिस्क टेकिंग कैपेसिटी है, तो आपके रायपुर के भी दोस्त होंगे और कॉर्पोरेट वर्ल्ड के दोस्त होंगे या स्टूडेंट दोस्त भी होंगे। उन सब में इसकी क्या चर्चा है, क्या सवाल पूछते हैं, उनको क्या लगता है ऐसा कर सकते हैं, करना चाहिए, उनको भी आगे आने का मन करता है?
सर मैं जैसे कि अभी मेरी एज 23 इयर्स है, तो मेरे पास अभी रिस्क टेकिंग एबिलिटी भी है और टाइम भी है, तो ये सही समय होता है। मैं ना यूथ को लगता है कि हमारे पास फंडिंग नहीं है, बट वो गवर्नमेंट के बारे में अवेयर नहीं है, तो मैं अपने साइड से यही उन्हें सजेशन देना चाहूंगी, अब थोड़ा रिसर्च करो। जैसे मुद्रा लोन भी है, वैसे पीएमईजीपी लोन भी है, कई लोन जो आपको विदाउट मॉर्गेज मिल रहे हैं, तो अगर आपके में पोटेंशियल।
All right, Prime Minister Modi there in conversation with beneficiaries of PM Mudra. Remember, the scheme has completed 10 years, 1 decade of dispersing loans. As much as 50 crore beneficiaries who've received 32 lakh crore rupees worth of loans. Moving on to other stories in news this morning. Well, it was a volatile day on Wall Street yesterday, as the S&P 500 closed lower after investor sentiment took a hit amid growing fears of an economic slowdown and ongoing inflation. By the closing bell, the Dow was down 0.9%. The S&P 500 slipped 0.2%, while the NASDAQ managed to edge up by 0.1%, closing in the green. Take a look.
U.S. stocks finished mixed after a roller coaster day on Wall Street, as President Donald Trump stuck to his tariffs. The Dow fell 0.9%, the S&P 500 slipped 0.2%, and the NASDAQ rose 0.1%. Early on Monday, the indexes touched their lowest levels in more than a year, and a key measure of volatility, also known as Wall Street's fear gauge, hit its highest level since August 2024. Investors continue to worry about an economic slowdown and rising inflation, as Trump warned he could further increase tariffs on China. But George Cipollone, PMEFX portfolio manager at Penn Mutual Asset Management, says he thinks the market is angling to move higher.
I think in general, given the magnitude of the declines that we've seen and the tough tariff talk, the market wants to it wants to rally, it wants to reverse here, and so it wants any shred of evidence that the Trump administration might back off. And so we saw a rumor earlier today, made the market absolutely surge. The Trump administration kind of tamped that down pretty quickly. Again, I think the Trump administration has this strategy, and it's to be as tough as they can possibly be, in spite of whatever happens to the markets. But the market desperately wants to reverse, and you could just feel it. There's a tangible feeling that it wants to reverse here on any bit of good news.
Well, markets want to reverse on any sign of good news, is the message coming in from the U.S. markets. Meanwhile, U.S. President Donald Trump has issued a fresh warning to China, escalating tensions in the ongoing trade war. Now, taking to social media on Monday, Donald Trump threatened to impose additional tariffs on Chinese goods, a move that rattled global markets and worsened investor concerns. The post on his platform, Truth Social, came in direct response to China's latest retaliatory measures following U.S. tariffs announced just last week. Now, this is exactly what Donald Trump has said on Truth Social. If China does not withdraw its 34% increase above their already long-term trading abuses by tomorrow, which is actually today, April 8th, 2025, the US will impose additional tariffs on China of 50% effective April 9th. Additionally, all talks with China concerning their requested meetings with US will be terminated. Now remember, President Trump's tariffs threats have sent shockwaves through global markets, but the US president remains defiant.
Would you be open to a pause in tariffs to allow for negotiations?
Well, we're not
looking at that. We have many countries that are coming to negotiate deals with us, and they're going to be fair deals, and in certain cases they're going to be paying substantial tariffs. There'll be fair deals. With China, as you know, against my statement, they put a 34% tariff on above what their ridiculous tariffs were already. And I said, if that tariff isn't removed by tomorrow at 12 o'clock, we're putting a 50% tariff on above the tariffs that we put on. So they've gone for years. They've become a rich country because of people, again, that were in the White House that allowed this to happen. Hundreds of billions of dollars a year they'd make on us on trade, and it shouldn't be that way. And I have a great relationship with President Xi. I hope it's going to stay that way. I have great respect for China, but they can't do this.
And no matter whether or not you believe Donald Trump has thought through these tariffs, Goldman Sachs raises odds of U.S. recession to 45%. That's right, if most of the April 9 tariffs do take place. This as per a Bloomberg report citing Goldman Sachs. Effective tariff rate will rise by an estimated 20 points. Now, this follows tightening in financial conditions, foreign consumer boycotts, and a spike in policy. Goldman Sachs economists have raised their recession probability assessment and brought forward the forecast timing of the next U.S. Federal Reserve interest rate cut following the Trump administration's tariff announcement. Economists at Goldman Sachs raised the 12-month recession probability to 45% from 35% earlier, according to a research note dated April 6. Now, this follows a sharp tightening in financial conditions, foreign consumer boycotts, and a continued spike in policy uncertainty that is likely to depress capital spending by more than what was previously assumed. The economists said their baseline forecast still rests on the assumption that the effective U.S. tariff rate would rise by 15%, which would require a large reduction in the tariff scheduled to take effect on April 9th. If most of the April 9th tariffs do take effect, they said, then the effective tariff rate will rise by an estimated 20 points once those increases and likely sectoral tariffs take effect, even allowing for some country-specific agreements at a later date. Meanwhile, in a sharp recovery from the Black Monday, Asian markets today are inching higher. Let's look at first what's happening in the Japan stock markets. The Nikkei 225, after it had slumped close to 8% in trade yesterday, the Nikkei is completely green this morning. The market is up more than 6% in early trade. On your screens right now, the Japanese stock market and companies like Toyota and Honda household brands in the US have surged in trade today by more than 7%. So this is Japan for you. Let's move on now to Hong Kong's Hang Seng Index, which had slumped as much as 13% in trade yesterday. Hang Seng is inching higher this morning. Again, most indices seem to be in the green, barring HSBC, which is looking at minor cuts in trade this morning. That's not all. You've also got South Korea's Kospi and Korean brands like Samsung, LG, as well as Hitachi, which have a major US presence, Kia, I beg your pardon, which have a major US presence, are all looking good this morning. Well, LG has now slipped about 1 percentage point in trade. Samsung, meanwhile, inches up about 1.6% or so. This is the news coming in. Mostly the mood on Asian markets is good, barring Taiwan. And Taiwan, remember, with its semiconductor prowess, continues to be one of the critical countries for the US. And TSMC, the semiconductor manufacturer, the state-funded semiconductor manufacturer, is down about 5% on the Taiwan index this morning. Let's quickly look at the Asian markets and a snapshot of which market is faring how in trade this morning. Like we told you, Nikkei 225, Japan's benchmark, is up about 6% in trade. South Korea's Kospi is up less than 1 percentage point, while the Hang Seng, the Hong Kong stock market, is up almost 2% in trade. And moving to India and the ongoing trade tariff dispute, well, External Affairs Minister S. Jaishankar and U.S. Secretary of State Marco Rubio on Monday agreed to the need for early conclusion of the proposed India-U.S. bilateral trade. Now, the issue figured prominently during a phone conversation between Jaishankar and Rubio that came days after U.S. President Donald Trump announced reciprocal tariffs for around 50 countries, including India. It was the first high-level contact between the two sides after Donald Trump announced the tariffs on April 2nd. Now, in a post on X on the phone conversation, Jaishankar said it was agreed on the importance of the early conclusion of the bilateral trade agreement between India and the US. The External Affairs Minister also said that he and Rubio exchanged perspectives on the Indo-Pacific, the Indian subcontinent, Europe, Middle East and the Caribbean. Remember, India and the US are currently holding negotiations on a bilateral trade deal following talks between Prime Minister Narendra Modi and Donald Trump in Washington, D.C. in February. The two sides announced to negotiate the first tranche of the bilateral trade agreement by fall of 2025. Now, just last month, U.S. Assistant Trade Representative Brendan Lynch visited India and held talks with his Indian counterparts on firming up the bilateral trade agreement. Now, in line with the U.S. America First policy, Trump announced reciprocal tariffs on its partners and other nations that impose higher levies on imports from the U.S. Saying New Delhi imposes high import duties on American goods, the U.S. has announced 26% reciprocal tariffs on India as the Trump administration aims to reduce the country's trade deficit and boost manufacturing within the country. The 26% duty is over and above existing duty being faced by Indian goods being imported into the US. Meanwhile, the European Union has now seemingly joined hands with the US in urging India to slash its steep import tariffs on cars as part of a long-awaited trade deal. And reportedly, Prime Minister Narendra Modi's government appears ready to negotiate this, according to a Reuters report citing sources. The report says India is considering a phased reduction in duties from over 100% on imported cars to as low as 10%, a move that could open the door for European auto giants like Volkswagen, BMW and Mercedes-Benz, US Tesla. The talks come just weeks after US President Donald Trump made similar demands in his own trade discussions with India, adding pressure on Indian car makers already worried about competition and the future of domestic manufacturing in the auto sector in India. But companies like Tata Motors and Mahindra, homegrown auto brands in India, warn that slashing tariffs too quickly could hurt local players and derail EV investments. For now, India's industry has proposed a gradual tariff cut for petrol vehicles and no change on EV duties until at least 2029. With global trade tensions rising and a possible recession looming in the US, at least, analysts say both India and the EU may need to show more flexibility as both sides aim to finalize a trade deal by the end of the year. And in better news for India, Apple is ramping up efforts to ship more iPhones from India to the US in a bid to soften the blow from the latest round of reviewed and renewed tariffs imposed by President Donald Trump on Chinese imports. This according to a Wall Street Journal report. Now, the tech giant Apple iPhone maker is threatening this move as a short-term fix while it pushes for relief from the new tariffs imposed on China. At present, Apple believes the global trade situation is too volatile to justify an overhaul of its entire supply chain. Now, Trump's revised tariff package included a whopping 54% duty on Chinese goods and a smaller 26% levy on imports from India. Analysts estimate this could add around $300 to the current hardware cost of an iPhone 16 Pro, which currently retails for just about $1,100. Now, according to the Wall Street Journal, Apple could ease the burden by importing more iPhones from India, where the duties are slightly lower than China. The company is projected to manufacture 25 million iPhones in India this year, with 15 million of those likely headed for the US market alone. Analysts also believe if Apple redirects all India-made iPhones to the US, it could meet roughly half of the American demand for iPhones in the year 2025. Remember, Apple has been expanding its manufacturing footprint in India since 2017, shifting not only older models but also the latest devices production lines here in India. The move helps Apple diversify beyond China, reduce tariff exposure and cut import costs, selling within India, now one of the world's fastest growing smartphone markets. But remember, this move also comes at a time when Apple has already pledged investments of over $500 million to set up a factory in the US. Moving on now. Oil prices dipped sharply on Monday, falling around 3% to their lowest level since 2021. The drop came as fears over weakening demand gripped global commodity markets, with the US-China trade war intensifying once again. More details in this report.
Oil slid 3% on Monday to its weakest level in 4 years. Brent futures and US West Texas Intermediate crude futures hit their lowest since April 2021. Both benchmarks have lost more than 10% over the last week. It follows a large drop in oil prices Friday as markets worry US-China trade tensions could cause a recession. They fear it could see a fall in demand for crude, while OPEC Plus looks to increase supply soon. Oil prices are an important indicator for Russia's financial health. Here's Kremlin spokesperson Dmitry Peskov.
Of course, this is an indicator that is very important for us, very important for filling our budget. And of course, we are following the situation very closely, which is currently extremely turbulent, tense and emotionally overloaded.
Commodity markets, including metals, also fell. Base metal prices in China dropped, with copper on the Shanghai Futures Exchange falling 6%, hitting its lowest in more than 3 months. Gold climbed to a record peak last week, but later dropped amid a wider market sell-off. However, gold prices pared earlier losses Monday as some safe haven demand filtered through, and analysts held an upbeat outlook for bullion. Investors are worried about the intensifying trade war between the US and China and its impact on demand for raw materials. Major stock indexes plunged as US President Donald Trump showed no sign of backing away from his sweeping tariff plans. Investors' rising risk of recession could see the Federal Reserve cut interest rates as early as May.
So meanwhile, with softening oil prices, India has raised excise duty on petrol and diesel by 2 rupees a litre in the wake of these softening oil prices globally. This move will not impact retail fuel prices, but oil marketing companies will take a hit on their profits despite lower. Now, in a surprising move, however, Oil Ministry has raised LPG prices by 50 rupees a cylinder to offset subsidy losses of over 41,000 crore rupees to the energy industry. The price rise on LPG cylinders comes into effect from today. Well, time for a short break right here on Morning Brief at 9. But when we come back on the other side of the break, we will have with us Feroz Aziz and Mohit Gang, and they will help you decode what to do with your money and stock market investments in these volatile times. You are watching Morning Brief at 9.
What does it take to be the greatest in the world? There is one thing which truly sets you apart. Your inner strength. Sodium TMT Reebok, true inner strength.
I need expert performance. I need my career.
Bharat welcomes the world to a new era of creativity. Waves, World Audiovisual and Entertainment Summit. Connecting creators through Creative Sphere. Wave Accelerator. Waves Bazaar.
Where stories, ideas and content go global.
Connecting countries through global media dialogue and Bharat Pavilion.
Shaping narratives and partnerships. Culture, cinema, gaming. Waves fuels the next wave of entertainment.
Connecting creators, connecting countries. Waves 2025.
In the age of OTT platforms, to watch or not to watch? That's the question. Because you are what you watch. It's our review but your choice to skip it or stream it. Hello and welcome. I'm Krishna Kumar. This is Skip It, Stream It. Every brand tells a story. And they are the storytellers, the Sutradhars. They present a brand with band, baja and barat to you. They are the Brandwalas.
Back, you are watching Morning Brief at 9. I'm Karthik Malhotra. First up, let's look at the mood of the markets this Tuesday morning as they opened in the green. Well, as expected, taking a cue from its Asian peers as well as the US markets, the Nifty 50 is up 1.5% or so in trade this morning. So is the story with the Sensex. Volatility, remember, volatility had increased by almost 70% yesterday. The fear index, as many are referring to the Indian VIX, has ebbed down today. Indian stock markets volatility now down to about 20. We are seeing handsome gains this morning in the small cap and mid cap space. The Nifty small cap and mid cap indices are both up about 2% or so in early trade. Let's look at the Nifty 50 heat map. Well, this is something that I think all investors were waiting for. We saw a sea of red yesterday. Tables have turned completely on the Indian markets, and this is a green start, green shoots as many would refer to it, now emerging on the Nifty 50. Well, just one piece of surprise coming in from TCS, which is down about 0.5% or so in trade today. This despite the tech-heavy US NASDAQ that closed in the green yesterday, impacting all other IT stocks positively. Remember, Infosys and Wipro at one point yesterday were nearing almost a 9% decline before their swift recovery. This morning, Infosys is up about 2.3%. Wipro is up about 0.8% or so in trade. Look at the auto sector there. Tata Motors, which had taken a massive beating on its chin yesterday, is also up for some sort of a recovery, though still far from its lifetime highs of about 1,200 rupees or so. Tata Motors this morning is up about 4%. Well, the mood of the Indian market looking good, isn't it? Feroz Aziz and Mohit Gang both joining me on the show this morning. Feroz, let me start by asking you, as expected, US markets inched up a little higher yesterday, especially the NASDAQ, and even and the S&P had fallen. I think the impact that the markets witnessed after Friday's meltdown, which reflected on Monday, today was expected to be a better day, and here it is. It is definitely a better Tuesday.
Good morning, Karthik. Like you rightly said, we were in the oversold, the global market especially, had oversold extensively during events, emotions. So once there is some degree of calmness, then the markets try to rebound. Of course, the implied volatilities yesterday didn't say that. 2650 put closed at 43 rupees with 2 days to expiry. That's an implied volatility of 72%, which means that the markets were not prepared for a gap up or at least a positive move. Today, the same put is opened at 8 rupees, which implies now the 72 implied wall has fallen to almost about 19 implied wall, keeping 2 days in mind. That's only one trading day. So 42 rupees didn't indicate the overall sentiments, confidence of the market's participants that today will be a great day. But of course, Karthik being Karthik, like I had heard you being a lot more positive yesterday, like I was on a few news channels as well, saying that these are opportunities to buy when emotions are high.
Right, opportunity to buy. Well, Mohit Gang, I'm not sure investors who are watching this broadcast would have said that yesterday when news reports of 14 lakh, it started with 20 lakh crore rupees wiped out, 19 lakh crore rupees wiped out when the day ended, 14 lakh crore rupees wiped out from the Indian stock markets, and almost 10 months of gains that investors had seen seem to have been erased yesterday. So, I mean, how do you tell investors to deal with this fear psychosis when they see their investments completely in the red? I mean, who will take that plunge and go ahead and buy more when you don't know whether you've hit the bottom or not?
Morning, Karthik. Look, I think to know whether you've hit the bottom or not is a guess game. Anyone who claims to know that, I think, is perhaps either fooling or has some God-gifted talent, right? So my sense is that's never possible. But these are opportunities. These are the kind of days when if you don't enter it, typically you end up never making extraordinary returns in your portfolio. You will always make the par returns which markets will give when you enter the markets at 24,000 Nifty level. You will never make extraordinary returns from that level. But if you enter the market at 21,900 or 22,000 levels, I think that's where the real opportunity is. Of course, you are taking a bit of risk. Of course, there is a chance that markets might further plunge, and that's where the whole prudence idea comes in, which says that you never dip into the river or never test the depth of flowing water with both your feet, right? So you just have to dip your toes in, you have to test the flow of the water, you just have to put in 20-25% of your liquidity and allocate it, and just try and see how the markets calm down and how the markets react over a period of time. You can never go in with all out in these kind of markets.
Right, okay. Well, dip your toes, don't insert both your feet in the water. You don't know how deep the water is. Feroz, the markets hate uncertainty. This is something I've learned from you when we've spoken during the COVID-19 days and even more recently as last week. Markets hate uncertainty. But markets, I think, would hate one word a little more than uncertainty, and that is the R word, recession. Now, with talks even stronger of US potentially heading into recession, we haven't seen the kind of meltdown yesterday, even despite Goldman Sachs raising its probability recession risk for US up to 45%. So how do you think, if the US does go into recession, what kind of an impact should we expect on other markets, including India?
Yes, Karthik, coming to the recession, the R word, like you called it, that's a great way to refer to a recession. But I would love to borrow the question back from Mohit on that one bit, because we also face this huge difficulty of how to control emotions of about 12,000 families who have reasonably large amounts. So if somebody's got 10 crores, his portfolio is moving 30 lakhs every day on times like this. If somebody's got 100 crores, he's seeing 3 crores plus or minus. In absolute terms, those values are so large that it becomes even more difficult to hold on to emotions. So what we did a simple exercise. For the last 24 years, we looked at the worst financial year day, which was the least level of Nifty for that specific financial year. We also looked at if God were to be very kind to you and told you that this was the bottom day, which, like Mohit said, it's impossible to predict, what would be the return? The return was 44% if you could buy on that day. And the average return was 45, best was 92, worst was 11. Now, that's not the point I was trying to get to. I looked at the newspaper headlines of all these 24 days, which was the worst Nifty. Let me pick the latest one, which was 5th June 2024, which is the election subsequent day. The newspaper of 4th June, printed on 5th June, read, Sensex suffers the biggest loss of 4,390 points, 31 lakh crore wiped off. Now, you look at all these 20. If you looked at the newspaper headline, those are great lead indicators that you will make abnormally more than average returns. So whenever you see a newspaper which is giving you a very, very bad picture, like I'm sure today's newspaper I've not read yet, because I had a show to do with you. So that's how we control emotions. We say that अच्छी खबरें और अच्छे दाम साथ में नहीं आते.
Right.
So that really helps people's gut. And not get too emotional.
Right. Well, one of the headlines I read, Feroz, this morning was tariff-fied. So the wordplay on terrified, I think the tariff wordplay was into effect. But you're right. I think these newspaper headlines obviously then become a cue for people to go ahead and invest. But Mohit, I think Feroz is referring to the wealthy of the wealthiest. And how does the average retail investor who is, and there's a question I asked Feroz last week as well, but I want to bring it to you, that somebody who's looking at these easy discount broker apps with these beautiful pie charts of their investments. How does somebody like that, a retail investor with not too much disposable wealth available, with perhaps not as high a risk appetite, as the wealthy folks that Feroz is referring to, how does somebody like that make sense of what to do with their investments? Because there is a confusion in the plethora of news which is coming in that even gold is likely to tank. Gold could touch 56,000 rupee levels is something I was reading. Real estate market is likely to slow down, and crypto is not legal in India. But here you have a situation where markets are continuing to tank. So for the average retail investor looking at these fintech apps, looking at wealth erosion, not with the newspaper headlines, but what is available on the dashboard, how does he make sense of what to do with his or her money?
Yeah. Look, I think Feroz has very beautifully put it out in terms of how to manage emotions and what data points to check and so on and so forth. And there are multiple data points, Karthik, which all of us can quote out here, right? There's in last 44 years of Sensex history, I don't think so there's ever been a year, or there's just been 4 calendar years where markets have tanked less than 10% from the peak levels, right? So corrections are part of a normal market cycle. You will face it. Every 3-4 years, you will face a 30-35% kind of correction, and every year you will see a 10-15% kind of markdown. Now, coming back to your main question, which is what do a retail investor who is trading on apps perhaps do in these kind of scenarios? Look, I think those retail investors are also watching your shows, are also tracking a lot of news info on YouTube channels, on their digital apps, so on and so forth. And perhaps they would have realized the importance of asset allocation by now. If they haven't, I think these kind of corrections are lessons in right earnest for them to realize that how critical asset allocation is. If they've allocated 60% of their money to equity and 30% to fixed income and 10% to commodities, and perhaps by virtue of market cycle, the equities have fallen below 60 and come down to 50. It's the time for them to take equities back to that 60 level. Whether they do it by reallocating the assets within the same thing, if they don't have the liquidity available with them, or if they have fresh liquidity, they pump in more into equities, is a call which each individual will have to take at their own level, right? And vice versa. If let's say the fixed income allocation has gone up, then perhaps or equities have gone up, they are still sitting on profits, and perhaps they need to rebalance it quickly if they haven't done it as yet, right? So as long as you are sticking to the financial goals, you're sticking to the right asset allocation philosophy, there is no reason for you to panic, right? The problem arises when you are highly allocated to equities, you are allocated to small caps and micro caps, you've not done your own research or homework, you've just gone by tips, you've just seen some channels on YouTube, and you've just invested your corpus. That's where I think these kind of market lessons will always teach you and perhaps make you a better investor in times to come. Right. And yeah, so that's my only take on this thing.
Right, but asset allocation, goal-based investing, Feroz, is something that we've been talking about, hearing experts like you speak for more than a decade, at least to my memory, that asset allocation is important, and reanalyzing your asset allocation in a periodic manner, looking at certified financial advisors to give you input. How many investors today really follow that? I mean, we have record number of demat opens in the Indian stock markets and trading. We have record number of mutual fund inflows, SIP accounts, etc. month after month. But the fact is, how many of people are actually following this asset allocation advice seriously and understanding the importance of goal-based investment?
Karthik, I'm reasonably positive that the trend is very, very heartening, and I'll give you some trends. Point one I'm trying to make is, see, when you're moving an elephant, it takes time. Like India's asset allocation itself is wrong. India has not more than 6.7%, 6.8% of the total household savings of 930 lakh crores, including physical and financial assets. We have only 6.7 in equity. How could you have only 6.7 in one out of the 2 growth assets? So the asset allocation in India is wrong. But is it changing? The answer is it's changing. Will you be able to see it in the next 5 years, 10 years? Maybe you will see it move a little. So I am very hopeful that people, because watching Karthik, they're watching so many other responsible media channels, social media is moving them towards the direction. When you're climbing a big mountain, when you turn back is when you realize that how much have you climbed. Otherwise, you're just looking at how much more to climb. So I'm very positive of how the trend has changed. Second, when it comes to retail investors, I'm surprised and shocked, pleasantly, of course, that they have behaved far more mature. You look at years where markets have shown turbulence, especially 2021 October to 23 October, when Nifty was flat. 2 years, it came back to the same level, October to October expiry. I remember those numbers because it was expiry, 26th October 2023. The SIP numbers went up from 11,000 to 19,000. Okay. So the retail guy is actually looked at media channels, responsible ones, of course, like yourselves, and become far more vigilant than the HNI himself. In the same period, HNI withdrew a lot of money from mutual funds. So that's point two. But coming to the one thing which you asked me and I inadvertently dodged it, was the recession part in the US.
Okay.
I'm so happy about this whole global tariff war. Because if we always prayed that we wanted China plus one, right? That was our narrative. Now today, if there is so much unsettlement, after the dust settles, where will India figure? Will it fall back at the same spot? The answer is no. India will figure significantly better after the shake-up than before the shake-up. Why? Because if China's per capita income is $13,000, US is $80,000, 2,500 is India, and India's labor force is increasing by 15 crore. How can you outsource manufacturing? US will have to outsource manufacturing. Manufacturing can't come at high expensive labor, right? That's why they've always outsourced. So whom will they outsource it to? Vietnam has got more duty. China's duties have, if you sum it up in the three tranches, it is 101 rupees compounded. India is 27%. So I'm very hopeful once the dust settles, India's positioning will be significantly better in the global trade than where it is, especially given the US is desperate to outsource manufacturing because it does not have cheap labor, and they have also driven away migrants. So where do they get the cheap labor from?
I couldn't agree more with you, Feroz. And Mohit, isn't this something that we noticed in the Indian markets also yesterday, when the Indian markets had actually taken the impact of the global meltdown much better as compared to its Asian peers? I mean, look at Hang Seng, which was down about 13% in trade yesterday. Taiwan was down more than 10%. You had, the Nikkei and the Kospi also down, if I remember, about 7 to 8% or so. But India finally closed just 3%. And news coming in this morning that Apple, and this is perhaps, corroborating what Feroz was just saying, that Apple is more likely to shift its production from China to India and enjoy a benefit of a reduced tariff. I mean, it's still high, it's still 26%, but as compared to 54% or what Feroz is saying, more than 100% compounded, this entire China plus one narrative may finally play out in favor of India, Mohit.
Oh yes, I think the new world order which will emerge post this entire scenario will have a favored position for India. But the quick question out here is as to when that world order emerges and after how much turmoil does it emerge, right? Relatively, yes, India stands in a much better shape. We have seen that yesterday Indian markets corrected only 3% vis-a-vis all the global markets which were crashing like anything, right? But if you see for a 5-month period, then I think perhaps the European markets and the US markets were doing much better, or even the Hong Kong market was doing much better than what Indian markets started correcting much before that, right? So depending on what time frame do you want to see, I think give or take markets have corrected because of this global mood check which is happening. However, look, I think I don't know how long this entire thing will last. From an Indian perspective, we will have an FTA going with US pretty soon, or a bilateral agreement going pretty soon. But will that end all the problems? Will that perhaps give a kick up, fillip to the market? I'm not pretty sure. I think markets will only turn globally once they see US and China settling their scores. Which way the dice will roll, it's anyone's call right now. But I think US and China need to settle down on the table first before the global markets can actually settle down. And my sense is that's still it will take some time for both of them to actually give inches away. So yeah, we'll have to wait and watch for that scenario to unfold. Right,
of course we will have to wait and watch. We will have to wait and see how the dust settles. But from what I see right now, and Feroz, correct me if I'm wrong, is that the trade war is actually between US and China. India happens to just be collateral damage, which means that no matter what, India's chances of coming out with a more favorable position vis-a-vis the US seems to be a high probability event, at least as compared to what China is likely to come out with. No matter how the trade negotiation, retaliatory tariff that now US is threatening China with, it seems that India, being also fundamentally strong at the moment, a large consumption economy, is likely to emerge stronger. Is that something that you would at least agree with prima facie, given what you're seeing in the world, Feroz?
I couldn't agree more that this is going to be a long drawn process and it is going to have ifs and buts. But what happens is markets start finding new news for itself, right? Market starts finding now, if tomorrow you have monetary policy 9th of April, which is tomorrow, then that takes precedence. What I'm trying to get to is uncertainty is lesser than the period of my investment. And if my period of investment is 10 years, the economic benefit of this shakeup will transpire in my economy. Today, if you look at the nominal GDP and Nifty's correlation on 11-year basis, it is 90% correlation. So if my nominal GDP is growing at 11% for the next 10 years, and this solidifies that argument, then I have 11-12% from Nifty, and some sharp fund managers get me that 3-4% alpha. Anand Rathi model portfolio has actually delivered 4.27% alpha over Nifty for 11 years compounded. Right? So then I have 14-15%, which is twice more than my debt return. Simplistically, do asset allocation like Mohit Saab said. Now coming to the second part, now you look at the collateral benefit of a recession. When I went to US in December 2022, met 8 fund managers who managed trillions of dollars. Everybody was waiting for a recession so that interest rates, which are abnormally high in the US, the average 10-year yield has been 0.92, but we are still at 4%. That's like India operating instead of 6% repo, or 10-year GSEC being at 7 as against 24. If it is 24, it's abnormal for India. Now that has to settle down. So everybody was waiting for recession. Everybody was inducing recession. Today recession is coming. Second, money was not coming. Every NRI I spoke to, he says S&P 500 has beaten Nifty for 11-year period in dollar terms compared with rupee terms. Nifty has delivered 13.5. S&P 500 from 1st April 2014 has delivered 15.5. So no NRI I would speak to would respect Indian market because it was like an FD. S&P 500 ऊपर ही जाएगा, मैं पैसे ही बनाऊंगा. That narrative had to be shaken up. Now there could be capital flows to emerging markets because money, naturally, if my home country is going to deliver dollar return greater than the rupee return of Nifty, why would I put money in India? That's why we lost 4 lakh crores. So liquidity can come back. Yields can come back to normalcy. A country can't operate for 20 years at an average of 1% 10-year GSEC and suddenly operate at 4%. All the business economics goes for a 6. So point is, recession is very good for the global market because it's artificial 4%. 4% पे भी कोई पैसा लगाने के लिए तैयार नहीं US में.
That's right.
Right. So that will now shake up the confidence of equity investors of the US, which is deserved. It was a bubble, right? And I think the US equity markets had to have some shake up in terms of valuations.
And this is that shake-up. Well, one final question to you, Mohit. We are running out of time, so I'll request for a short answer. RBI MPC, Feroz just referred to it, is scheduled for tomorrow, while a 25% basis point cut in interest rate is expected. What commentary from Sanjay Malhotra do you expect on growth forecast for FY26, given all that we've seen in the last 1 week?
Look, I think given the global scenario which is panning out, oil schooling below $60 a barrel, right, which is extremely friendly from an inflation perspective to India. The dollar index coming back to 103 levels, US 10-year hovering around 4% levels, right? And the kind of OMOs which RBI has done recently, it's actually the liquidity scenario has eased off. RBI is in a great shape to go ahead, reduce rates, not just by 25 bips, but even more. But I doubt whether they'll come tomorrow. 25 bips is there for sure, right? That's everyone's call. That's a unanimous call out there. But I'm more keen on hearing the commentary as to what's the commentary, what is RBI, how's RBI viewing the entire global scenario panning out, and are they ready to open the arm chest if required for exporters? Let's say if they were to give some extra line of credit to exporters or some support to exporters, I think those are the cues which markets will be looking at tomorrow. That's the most important part, plus the commentary going forward. How open is RBI to reduce rates further and reduce it faster than what is anticipated? Right. I think those are the things which we will look at tomorrow.
All right, Mohit Gang, Feroz Aziz, gentlemen, thank you so much for joining us here on News 9 this morning. Time for a very short break, but when we come back, other global stories which will make a dent on global economics. All those and more on the other side. You're watching News 9.
Light, camera, and action. Kick back, relax, grab your favorite snack because News 9 is here with your weekend dose of entertainment. It's time to take a deeper dive into the buzzworthy happenings of the entertainment world. From celebrity gossips to exclusive conversations, from nostalgic moments to News 9's pick of the week. Don't worry, we've got you covered here. And I hope you've grabbed your popcorn by now because News 9's page 3 is here to serve you everything that we call entertainment. So do stay tuned every Saturday and Sunday, 2:30 p.m.
You're watching Morning Brief at 9. Other global stories in news this morning. Israeli Prime Minister Benjamin Netanyahu became the first foreign leader to meet with US President Donald Trump since the president unveiled his new tariff policy last week. Now welcomed at the White House on Monday, Trump's second term began. The meeting comes at a tense moment for global markets shaken by the escalating trade war. Now, Netanyahu sought to ease the impact of new tariffs on Israeli goods during the meet. The two leaders also discussed the ongoing war in Gaza, the fate of hostages, and growing tensions with Iran, issues that have prompted a US military buildup in the region. Now, during their Oval Office meeting, Trump defended his tariff strategy, calling it a long overdue move to restore America's industrial base. And shifting focus now, British Prime Minister Keir Starmer visited a Jaguar Land Rover factory in Solihull in days after the automaker Tata Motors announced it would pause US shipments of its British-made Jaguar Land Rover vehicles for a month in response to President Donald Trump's new tariff policy. Now, addressing the factory workers, Starmer said Britain would fight to secure an economic partnership with the US while working to lower trade barriers with other key global partners. Remember, US and China are the biggest importers of British-made Jaguar Land Rover cars. Keir Starmer also acknowledged the heavy toll that Trump's 25% tariff on the car industry could take, calling it a huge challenge for the company's future. Listen in.
Our future is in our hands. And so, of course, we will keep calm and fight for the best deal with the US. And we've been discussing that intensely over the last few days. But we are also going to work with our key partners to reduce barriers to trade across the globe, to accelerate trade deals with the rest of the world.
Keir Starmer there. Meanwhile, the European Union says the door to dialogue remains open. European Commission President Ursula von der Leyen reaffirmed that Brussels is still willing to negotiate with the US over President Donald Trump's new import tariffs announced last week. She said the EU had already offered a 0-for-0 tariff deal on industrial goods, an approach that's worked with other trade partners in the past. However, von der Leyen made it clear that if talks fail, the EU is prepared to take countermeasures to protect its own interests. Listen in.
Major turning point for the United States. Nonetheless, we stand ready to negotiate with the United States. Indeed, we have offered 0-for-0 tariffs for industrial goods, as we have successfully done with many other trading partners, because Europe is always ready for a good deal, so we keep it on the table.
All right, and shifting to Asia now, Samsung is bracing for a weaker first quarter report this week, with analysts predicting a 21% drop in profit, largely due to slowing AI chip sales. However, the South Korean tech giant says its TV business might be less affected by US tariff than its competitors because it makes most of its TVs in Mexico. Take a look.
Samsung Electronics reports earnings this week, and the numbers aren't expected to be pretty. Analysts predict the South Korean giant will report a 21% drop in profit over the first quarter. It's fallen behind in the race to supply high-end chips to AI champion Nvidia. That has left Samsung more dependent on the market for cheap memory chips, for which prices have been falling. Investors bet it will again lose ground to local rival SK Hynix, where profits are predicted to more than double. Samsung is also grappling with the impact of Donald Trump's sweeping global tariffs. The US president has hit South Korea with levies of 25%. But there might be a ray of hope for the firm's televisions unit. Speaking in Seoul on Monday, the president of the division said it would be hit less than rivals.
TV가 많은 이제 매출의 포션을 차지하고 있는데
Yong Seok-woo said most Samsung TVs for the US market are made in Mexico, which has largely escaped the tariffs set by Trump last week. The executive said Samsung could also move output as needed, with some 10 production sites worldwide. Nonetheless, the firm said it would keep monitoring the impact of the new tariffs, which could hit demand and raise production costs for appliances of all kinds. Samsung shares were down around 5% in afternoon trade Monday, falling along with other big exporters amid mounting fears of a global recession sparked by the trade war.
Well, that's all we have for you on this edition of Morning Brief at 9. Remember, tomorrow the Morning Brief would be streamed live at 10 a.m. with the RBI monetary policy and Governor Sanjay Malhotra set to announce the rate decision and more. Well, that's it for now. On the other side of the break, you have Sriya Kundu decoding for you why is India's youth getting hit by lifestyle diseases. Stay tuned. That story and more coming up at 10 a.m. You are watching News 9.
Of OTT platforms, to watch or not to watch? That's the question. Because you are what you watch. It's our review, but your choice to skip it or stream it. Hello and welcome. I'm Krishna Kumar. This is Skip It, Stream It.
We made history for a reason tonight.
Will it change the shape of American foreign policy? Violence has erupted in Manipur once again. How can we pass judgment, sir, before any inquiry that, they were volunteers or militants, sir?
Light, camera, and action. Kick back, relax, grab your favorite snack because News 9 is here with your weekend dose of entertainment. It's time to take a deeper dive into the buzzworthy happenings of the entertainment world. From celebrity gossips to exclusive conversations, from nostalgic moments to News 9's pick of the week. Don't worry, we've got you covered here. And I hope you've grabbed your popcorn by now because News 9's page 3 is here to serve you everything that we call entertainment. So do stay tuned every Saturday and Sunday, 2:30 p.m.
What is to the nines? In literal terms, it's perfection. But to us, it's not just a phrase, it's an attitude. One that starts at your desk and sends a statement to the world. To the nines is about taking charge. It's a way of life where every seam, every fold, is crafted with excellence. It's timeless elegance and uncompromising quality made for the corner office. It's the ideas that inspire redefining order and elevating the tabletop. To the nines, for the leaders of today and the visionaries of tomorrow.
Every brand tells a story. And they are the storytellers. The Sutradhars. They present a brand with band, baja and barat to you. They are the Brandwalas.
It's not the fiefdom of politicians. They owe it to the people. Matter is now more about faith of the millions of devotees than just political slugfest. Does that mean that I can't get a job in Chennai, although I may be best suited for that particular job? They have more civic sense, they have more of civility than all these men. My name is Sudha Sadanand. Welcome to the South Indian.
Light, camera, and action. Kick back, relax, grab your favorite snack because News 9 is here with your weekend dose of entertainment. It's time to take a deeper dive into the buzzworthy happenings of the entertainment world. From celebrity gossips to exclusive conversations, from nostalgic moments to News 9's pick of the week. Don't worry, we've got you covered here. And I hope you've grabbed your popcorn by now because News 9's page 3 is here to serve you everything that we call entertainment. So do stay tuned every Saturday and Sunday, 2:30 p.m.
What is to the nines? In literal terms, it's perfection. But to us, it's not